Hi Easy Community, my name is Laila Conlon. I'm the new relationship rockstar in charge of looking after all our bundle owners. And today we've got two of the head honchos of the very awesome Canon Asset Managers to answer a few questions on the new offering on our platform, which is the Machabeng bundle. So from here I'm going to ask both Adrian and T to please introduce themselves.
Thanks for having us. I'm Adrian Saville. I'm the Chief Executive of Canon Asset Managers and the founder of the business 21 years ago.
Wow, fantastic.
I'm Fotliso Pakisi and I'm the investment analyst. I've been working with Adrian for 4 years now.
Fantastic.
And we're both responsible for looking after the portfolio, the Machabeng portfolio.
Oh, fantastic. It's great to have you here, so thank you very much.
Thank you.
Adrian, we're going to start with you. Just a few short questions. What inspired your team to create the Machabeng bundle?
One of our key pillars of thinking about investing is, if you lived on Mars, how would you see the world? And very often when South Africans think about allocating money to or away from South Africa, it feels patriotic or unpatriotic. If you can be dispassionate about investing and imagine that you lived on Mars, how much does South Africa account for world GDP? Less than 0.5%. And our jobs are here, our families are here, our cars are here, our homes are here, our pensions are here. Given that very high exposure to the South African economy, what we would call home bias, we think it makes imminent sense that you consider the world as an opportunity. And if you use that maths, how much of your portfolio should be outside of South Africa? Hold your breath, 99.5%.
We've got it on our blog and we've got some info out there talking about the companies within the bundle that do good companies. So what are some of the companies that form part of the bundle and why did you choose them?
Well, the companies, one of the things we want to emphasize throughout our investment process in identifying good businesses is we want three goods. We want a business that is available at a good price. We want a business that is good in its behavior and performance, what many investors would call a quality portfolio, a quality company. But the third good that we want is a business that, all else equal, does better than its peers, does better than its industry, and in that way is a contributor to positive impact. Now, if you're building a diversified portfolio, by definition, it's hard to do that because there are some industries that simply don't do as good as others. But our emphasis is on finding businesses that, relative to their peers, are good. So three goods. And examples of that would be businesses like Amgen or Biogen, which are in genetics, neuroscience, cancers, working with leukemia, for instance, and industry leaders, well-established industry leaders in medical science and technology. Not as impactful in terms of looking after health, but certainly looking after business and creating jobs, would be businesses like Seagate and Micron and KLA, which are in memory, data storage, processing, and the monitoring of the manufacture of microprocessors. So those would be examples of businesses that make up the portfolio. We're looking for businesses that have a sustainable advantage, that do good, that we can buy them at a good price, and that we can assess them in their entirety as being holistic, wholesome, good companies. I've overused the word good.
No, well, that's fine.
That's the point.
Those are the companies you're looking for.
And so, come back in 10 years' time, and our assessment as things stand is that these businesses will have built new technologies, new products, whether it's in medical devices, medical pathways, drug pathways, technologies like data storage, communication. Those are the types of businesses we're after in this portfolio.
Why is an offshore portfolio a good choice for an investor?
95% of economic activity globally takes place outside of South Africa, so it might serve you to go and look there. But just looking there wouldn't be of much use if they did exactly the same things. When you look into our bundle, Easy Equities bundle, what you find is businesses that do things entirely different to your universe in South Africa. And those companies that are already listed are, some examples. Others would be businesses like Bank One, which works in an entirely different credit arena, or a power utility, a PPL, which does utility or invests in utility that simply isn't available in South Africa. And so one part of diversifying is you can get out of South Africa into a wider universe, but another part of the diversification is that you get into companies or industries that simply aren't available in South Africa. And that's a powerful component of diversification. And then always recognizing that when we're doing well, others might not be doing well. When we're struggling, others might be doing well. And a core part of this portfolio is US exposure, and the US has been a superstar for some time, and that's really helped the performance of these investments. However, this is not a US obsessed or a US centric portfolio. It happens to be invested through the US, but many of the businesses are globally diversified, earning Swiss franc, yen, euro. And so one of the biases one of the biases that South African investors have is when they think about investing offshore, we go to the US and we're done. But the US right now is trading on more than 20 times earnings, and we regard the US as quite expensive. So diversification is not just go somewhere else, it's different, therefore you're going to be okay. It's thinking about what is that differentness, how does it behave, how does it perform, and how will it blend with my South African investment.
Lastly, to end with you, can you give us your 3 top tips for offshore investing?
If I go back over the parts of this conversation, I hope I've referenced them. So tip 1 is not just to leap offshore and imagine you are now somehow diversified. By way of example, buying stocks in Brazil, Russia, China might feel very different, but if you look at their investment performance, it tends to correlate highly with South African performance. When foreign investors want Brazil, Russia, India, China, they also want South Africa. And so we tend to behave in lockstep. So diversification is not just go somewhere else with a different name, you're diversified. I think point 2 about going offshore, and it's no different than in South Africa, is investing is not about buying good companies. It's about buying good companies at good prices. Good companies at a high price, you now own a fantastic business, you've just made a bad investment. So have I bought a good business at a good price, and then our emphasis, our overlay is we want these businesses to be sustainable, to be good, to leave the world better than they arrived. I think tip 3 is in that global diversification to think about not the fad, the flavor. It's easy to buy things that people are talking about. Amazon, Facebook, Google, the FANGs. It's easy to buy those. Take one step away and you will find businesses that have global standing, global stature, of substantial size, long histories that might be available at far better prices, and that give you far more effective diversification from the Bloomberg CNBC chatter. And take the time to look at those names, those opportunities. We're surrounded by truly a world of opportunity. It sounds cheesy, but we can look in this portfolio at more than 500 companies.
Fantastic, thank you. So we want to know who came up with the name Machabeng Bundle and why.
So the name was a brainstorming session from the whole team. Having established our Zande bundle on Easy Equities, and witnessing how well it was received, we decided to stick with the theme of creating a name that can both invoke some curiosity and also resonate with people who understand what the name means. So we came up with the name, and coincidentally, it's the high school that I went to in Lesotho. It's the only international high school. So that's how the name came about.
And it means?
It means international.
International, which is obviously what we're looking at. Fantastic. So the Machabeng bundle is a product for long-term investors, right? What about it makes it suitable for the long term and why?
So the nature and construction of the portfolio, being fully exposed to international equities and being an aggressive mandate, it's quite risky, and the bumpy ride which investors will be exposed to in terms of getting to the high capital growth that we want to achieve is what we ideally want an investor who can stomach a short-term volatility in this portfolio. So we are saying if you are willing to be invested in this portfolio for 5 to 10 years, this portfolio is suited to you.
Fantastic. So,
if I could just add, people often interpret riskiness as a challenge or a negative attribute of the portfolio. To be clear, the riskiness here is not about these are dodgy businesses or questionable industries. These are great businesses. The riskiness is really what in the investment world, the language risky means bumpy.
Correct.
So the ride is going to be bumpy. Hang on and look back in 5 years' time. If you're looking at this from a day-to-day perspective, you should probably have your money in a bank account earning stable interest.
Correct.
fantastic. Okay. Why would it be better to buy conventional offshore investments like the Machabeng bundle as opposed to indirect offshore investments?
So I think the main thing here is the rand exposure. So if you're going directly and not going through a rand denominated investment, you're managing your rand risk. So the rand is quite volatile. But in this portfolio, you are buying direct equities, so your performance is in US dollars.
Okay.
There is no rand. Well, if you decide to disinvest and bring money back to rands, but everything that you're exposed to is hard currency, which is the benefit.
Fantastic. Okay.
So it's a case of what you see is what you get.
Correct.
Yeah. There's no masking, camouflaging, sort of diluters or diversions. It's absolutely explicit US dollar exposure.
Okay, fantastic. All right. Tell me what kind of investor, well, we have touched on this. What type of investor would this be suited towards? So we sort of looked at, I guess, more, am I right in saying more in for the long haul and doesn't mind that bumpy ride?
I think nowadays, people, and Adrian alluded to this earlier, people are more aware of the need to diversify, and not just in terms of asset class, but in terms of geography as well. But if you look around, there's not a lot of products or solutions that afford people that opportunity. So with this portfolio bundle, we're saying, here's a bundle where you can get US dollar exposure performance, but in companies that have global exposure in terms of the operations, the costs are low and it's easily accessible, and which is what we trying to target. Yeah.
And then lastly, what else should investors know about the bundle? Other than we've chatted now, what do we need to know? And so we've got hungry investors out there that are looking at diversifying. We've got some really nice information with regards to offshore. What else do we need to know?
Is there a
This is-
fantastic team managing it? If I can
Besides
be
that, I was going to say, maybe not specific to the bundle itself. At Canon, we believe in eating our own cooking. I am personally invested in the bundle in my personal capacity with the little that I have. So if that gives investors any comfort, we eat our own cooking.
Fantastic. Awesome. Thank you so much.
Thank
Is
you.
there anything else from you?
Well, I think T's done a great job of describing, how we think about this, the investment horizon. He's made the points that this is accessible to a very wide audience. Very often when people think about dollar investing, it's A, expensive, B, it's a long way, it's intimidating. We think that this is understandable, it's accessible, it's affordable. We truly are investment managers. So the portfolio that we're buying here are businesses that will be around for a decade. We're not churning this portfolio on a weekly or monthly basis. And when you look at the names that make up the portfolio, these are companies you want to own. And here's a way that you can own it as a powerful diversifier, an effective diversifier to your existing portfolio.
Well, thank you both for joining us.
So
It was
much.
lovely having you. And I'm sure our Easy community is going to enjoy watching this.
And we look forward to chatting to them.
Yes, definitely. All right, so that's it for today, folks. Thank you to all our Easy investors for joining us. If you have any questions about the bundle, please send them through and we'll try and get back to you as soon as we can.
Thank you.